Jim Cramer versus Michael Burry. This inverse Cramer ETF is beating the market.
In April of last year, when Coinbase just went public, Cramer endorsed the company, saying it's a $475 stock. Since going public, Coinbase is down over 80%.
Now, I'd love it if you can get Coinbase in the low 300s, around 10 times sales. That seems unlikely. If you're willing to pay 15 times sales, not unreasonable, then this is a $475 stock. That's the upper end of what I'd be willing to pay for a large position. Still, you've got my blessing to put on a decent position at the opening, maybe half of what you'd normally purchase in one go, and then buy more, but only if it comes in. The bottom line, if you, like me, well, then you're a big believer in cryptocurrency, and you will want to own Coinbase for the long haul.
Welcome to Interweb Coins, where we cover crypto, the economy, and the people that influence it. We are here to lift the clouds, pull back the curtain, and give you a leg up in the world of crypto. If you watch till the end, you will know what Michael Burry and Jim Cramer say about investment in 2023, and how inverse Cramer ETF is beating the market by a lot.
Hey soldiers, we've got two very noteworthy, very popular investors who are out there making predictions about what's going to go on in the stock market. The question that many are asking, the question you may be asking is, to what extent should you listen to these individuals? To what extent should you pattern your investment strategy after what they're saying? Well, let's get into it, and we're going to talk about, how much credence you should give these people, and what actually ends up working better in the long run in terms of returns. All right, Michael Burry certainly has a flair for the dramatic. Now, we all know who this is. Michael Burry is the individual who was featured in the Big Short movie. He was played by Christian Bale, and he pretty much called the 2008 crash. He made a lot of money betting against the whole mortgage default swap house of cards. Made a tremendous amount of money and made a name for himself. The fund manager of the Big Short fame deleted his Twitter profile on Wednesday, a day after issuing an ominous one-word message to investors. That message said simply, quote, "sell," unquote.
Empty vessels make the most noise. This is one of the best quotes to describe Jim Cramer, who is growing in popularity in the wrong way. In fact, Cramer became infamous in the stock market world to the point where people made an ETF for betting against his stock picks. An inverse Jim Cramer ETF is a type of exchange-traded fund, or ETF, that aims to perform the opposite of the stock recommendations made by financial commentator Jim Cramer, who is a popular financial personality and the host of the television show Mad Money. An inverse Jim Cramer ETF seeks to profit from the idea that these recommendations may not perform as well as expected. Inverse ETFs use derivatives and other financial instruments to achieve their investment objectives and are designed for investors who are looking to bet against certain market trends or conditions. An inverse Jim Cramer ETF may appeal to investors who are skeptical of Cramer's stock picks and believe that his recommendations may underperform in the market. It is important to note that inverse ETFs are not suitable for all investors and come with unique risks and considerations. They are typically more volatile and complex than traditional ETFs and require a higher degree of investment knowledge and experience. In addition, inverse ETFs are often used as a short-term trading vehicle and are not intended to be held for long periods of time. In his latest episode, Jim Cramer told viewers that they should buy the dip and that this is the beginning of a new bull run. Meanwhile, Michael Burry tweeted with one word: sell. Michael Burry is an American hedge fund manager and investor who gained notoriety for his successful bet against the housing market in the mid-2000s. He is best known for being one of the key players in the story The Big Short. Burry is one of the first investors to identify the housing bubble and to bet against the subprime mortgage market. He did so by purchasing credit default swaps, which are a type of financial instrument that pay out if a loan defaults. By the time the housing market began to collapse in 2007 and 2008, Burry's bet had made him and his investors a substantial profit. The two investors are at odds over the stock market, but one thing is for sure: the inverse Cramer investors will definitely contradict whatever Cramer is saying. Cramer went wrong again last month, and this time it was Bitcoin. BTC added 35% shortly after Jim Cramer said it was a good time to get ditched in mid-January. Around the time Cramer tweeted, Bitcoin was trading around the $17,300 price area. The crypto has since skyrocketed by 35% to post a local peak of $23,371 set on Saturday, January 21st. In other news about cryptocurrencies, a study found that 60% of North Americans buy crypto without any due diligence. Bybit crypto exchange and consumer intelligence platform To Luna surveyed more than 10,000 people to see whether they follow a due diligence process before pouring money into crypto, and according to their findings, roughly 50% of North Americans said they become hodlers after brief research about the ups and downs of crypto. 15% said they only relied on social media and friends' advice before they allocated funds to cryptocurrencies. Finally, BTC has reclaimed the 3-day 50 moving average, which is a high time frame respected indicator for a bullish trend.
This reclaim of the 3-day 50 moving average is a very important signal to watch because it doesn't happen often. You can see for the entire duration of the bear market, we did not have it. But once we got above it, you can see, go and look at this on the chart for yourself. When we get these reclaims, sure, it can be a fake out, but until we get back below it, so you can see that's currently about 18,800, 19,000. Until we get back below that, we have to assume that this could be a confirmation of a new multi-week or multi-month trend to the upside, and this could go a lot higher than where it currently is, with or without pullbacks from current levels. Of course, there's pullbacks along the way, but like I said earlier, also we have to wait and see where do those pullbacks happen from, because we might get a decent pullback. But if you're waiting for that pullback all the way from 20,000 and it goes up to 25,000 or 28,000 before we get a major pullback, obviously that's not going to be optimal, right? So, my opinion, the trend is to the upside on the 3-day chart. Invalidation only for me when we get back below this 3-day 50 moving average, which means there could still be a pullback, right? We could drop this weekend and we could drop to 19,000, but that's still okay because that would just be retesting it. As long as we don't close below this 3-day 50 moving average, I think things are good for the upside, and we could potentially go a lot higher, especially if this is a repeat of 2019. Then the upside is potentially the Fibonacci golden pocket zone over here in about the high 40,000s. But let's first see if we get to 25,000. I think that is going to be taken out at some point. Then the next level we're targeting is probably this area, somewhere between 28 and 32. And after that, well, potentially the Fibonacci golden pocket. So one thing also, just a bit of words of warning or of caution, you got to be very careful with following emotions for investing, okay? That is never a good idea.
We hope this provides you with a bit more insight into the current state of the crypto space. It is important to understand what the industry experts have to say and should be a pivotal part of your research. We want to remind you to continue to do your own research and not take this as financial advice. We hope that we have provided you with some value today. If you feel compelled to reciprocate, please like or subscribe, as this helps us positively impact more people like you. If you have yet to get on an exchange or are interested in finding out where we buy our crypto from, check out the video description below. Using our top exchange section to sign up for an exchange can also support the channel. We hope you tune in for future videos.